world. All right, so let's explain the Balaji bet since that trended, and he is the boy who, as you're saying, cried wolf this past week.
Cried Bitcoin.
Yeah, the boy cried Bitcoin. Very well said. So a friend of the pod, Balaji, on March 17th, predicted that Bitcoin will reach $1 million in 90 days due to U.S. hyperinflation. Hyperinflation is defined as prices going up 50% month over month, just so we're clear on exactly how dramatic that is. He made the bet on March 17th against a pseudonymous Twitter user, James Medlock, who said they would bet 1 million that the U.S. would not experience hyperinflation. So Balaji sort of inserted Bitcoin into that bet. It wasn't a Bitcoin bet then. And I think he's done 2 of these bets. So he's betting 2 million in total on Bitcoin hitting 1 million by June 17th, which there's probably no chance of that happening, or a very tiny chance. I'll ask the panel in a second. Bitcoin was trading at 26,000 at the time. It's now trading at over 28,000. And Balaji has been on every podcast known to man in the last 72 hours talking about this. I've watched 1 or 2 of them. And it's a pretty out there argument, I think. You can just type in Balaji on YouTube and watch any of the 20 he's done. He believes regional banks are insolvent. He thinks the Fed is going to need to print a massive amount of money, like we've said here, do more QE, and then cut rates. It all seems reasonable. But that will lead to hyperinflation.
It's not reasonable.
Well, no, it's not that it's reasonable. That we just printed that they're going to cut rates. We just discussed they're going to eventually cut rates, and there'll be more QE. So that part is reasonable. Just that one little piece. But then he believes is the part that is kind of out there, that hyperinflation is going to devalue the dollar, and this is the time. He does not, and I made a bunch of, I asked him this a bunch of times, and he would not be honest about it, or didn't want to answer my question. I said, hey, what percentage are you in Bitcoin? Somebody says he's 99% in Bitcoin. He will not confirm. And so I was like, well, if you own 1,000 Bitcoins, if this goes up, a very small amount, 4 or 5%, you're going to pay for the bets. And are you talking your own book here or not? Sacks, what do you think of this overall bet? Is it a stunt?
Yeah.
He's saying like this is the lifeboats moment. And just to add to it, he says you have to leave the United States and get to Singapore or a place, or if you're going to stay in the United States, you need to get to Wyoming or Texas or somewhere that explicitly allows Bitcoin, because the closer you are to the United States banking system, what happened to Silicon Valley Bank on that fateful weekend where people couldn't get their cash and we're going to have to, miss payroll? He says that's the dry run for the entire U.S. banking system. Sacks.
So first of all, I don't think you can disparage Balaji, because someone who cries wolf says this repeatedly and makes a dire prediction repeatedly and is wrong. And we can't say yet that Balaji is wrong. Do I think that we're going to have $1 million Bitcoin in 90 days? I personally find that very unlikely, but you can't say yet. He stuck his neck out making a prediction that will be easily falsified if he's wrong. Second, the last time that Balaji made a dire prediction was COVID. And he was right
about that one.
So you can't say that this is just like a doomer who throws out crazy predictions and is always wrong. He's actually pretty selective about his
nailed that one.
Predictions. Yeah, there was a tweet from January 30th of 2020 in which he basically predicted a pandemic based on a coronavirus and laid out a whole bunch of consequences that mostly came true. Which is why we're talking about this. This is not just some like random person. Like he actually has a pedigree and a track record. But here's my view on it: is
in doom and gloom.
Yeah,
yes,
he is,
him and Nassim Taleb, the 2 of our opening speakers at All In Summit 2023. Those would be our bookend speakers. Book them down.
Yeah, anyway, so look now. What do I think about it? I posted my own theory today, which I would call sort of Balaji light, which is. Okay, look, if you think about this spike in interest rates that we've had and that Chamath thinks will actually continue quite a bit longer, there are 3 main effects that it indisputably has. Number 1, undercuts the value of long-dated bonds. Number 2, it's made lending much more expensive, particularly for big purchases like real estate. Number 3, it's increased government lending costs. Okay, now, play that through the financial system. What does that mean? Well, if the value of long-dated bonds has sharply decreased, well, that's led to this banking crisis with the unrealized losses. That's already happened. Number 2, it's made lending more expensive. The credit crunch and CRE, we're beginning to see that. And I believe that's going to play out as the second crisis of this larger financial crisis. And then number three is the increase in government borrowing costs. That will eventually play out in terms of being a government debt crisis of some kind. And I think it'll involve, a spike in borrowing costs at the federal level and involve sovereign debt issues internationally. I think it'll involve budget deficits at states and cities. So I think there's three phases to this financial crisis. We're in phase one, and I think CRE and government debt are the next two phases. And I think a lot of that lines up with what Balaji thinks. Where I disagree with him is I don't think we can know what's going to happen in 90 days. I think that the CRE crisis is highly deflationary. It's going to create distress everywhere in the economy. That is going to lead to a massive reduction in liquidity. I think that the government debt crisis, assuming the government wants to inflate and monetize the debt as a way to solve that problem, that will be highly inflationary. But when these things play out, we can't know. I think that's what makes this really hard is I think jumping all the way to the sort of finish line and saying we're going to have $1 million Bitcoin in 90 days because the US dollar is worthless, I think that's premature. I think this could play out over the next couple of years.
We have a real problem if Bitcoin is the exit ramp.
Why?
For an inflationary crisis, because it's not accessible enough. It's not easily transactable for folks. I'm sorry to be negative to the Bitcoin maximalists. I'm generally in favor of this kind of independent storage system that's outside of government and state control. I think there's just this unfortunate reality. I mean, we saw with the Wells notice to Coinbase today. They just arrested that crypto guy.
Do Kwon was arrested in Montenegro, of all places.
Montenegro, great country. Kraken won't let you wire money in or out as of, I think, Monday or Tuesday. And so, it's clearly becoming kind of a less accessible system of storage. No, what's more accessible? Well, I do think that one of the reasons we're seeing the market move the way it does is because folks are shifting their risk assets around quite a bit right now to figure out where is a good place to put money. I was talking with a asset manager, this morning, and, they had a very strong point of view. Folks are moving capital away from what they think are going to be most impacted by the risk of this kind of massive inflationary event that may arise, or this massive banking crisis that may arise, or this massive real estate crisis that may arise. And there are other places to then put your capital that's not just Bitcoin. And sure, maybe some of these things are dollar denominated, but for example, there are many businesses that sell products in non-dollar denominated currencies globally. And while they report and trade on US stock exchanges, you're buying a security interest in a business that generates most of its income.
You're referring to Apple?
I'm referring to many different companies.
Yep.
And so there are many companies that get the bulk of their revenue, the bulk of their sales internationally. There are also many companies that will benefit in an inflationary environment, businesses that are tied to other types of real estate, businesses that are tied to certain capital equipment where consumption will not go down unless there's, significant, massive, global socioeconomic shock. And so I think that that's kind of a lot of what's going on right now. It's less about, hey, Bitcoin's the only place to go and be safe. And it's more about, let me reallocate my risk assets a little bit, to places that may benefit from, or may be better guarded from a massive kind of inflationary shock. And let me say one more thing. I think one of the biggest risks that is not being talked about is the debt ceiling vote that's due in June. In June, Congress needs to pass an increase in the debt ceiling because the amount of debt that the federal government is going to have to take on in order to meet our budget deficit and refinance our debt and pay our obligations historically means that we're going to have more than what we've approved to date in terms of the total amount of debt. Now, this has historically been a last minute vote, crazy dramatic thing that drives markets nuts. The Hill had a public opinion piece from Peter O'Rourke and Mary Spaeth, but I think they make a good point. I've talked to a lot of folks who are, call it in the fixed income market, but also folks who are in the equities markets publicly who are pretty nervous about this debt ceiling vote. And if it does look like the Republican Party takes a very hard line and says, because this is the current party line, if you don't agree to massive deficit cuts or spending cuts, and really commit to that in a bill that we can pass, that then also approves the increase in the debt limit, we are not going to approve increasing the debt limit. And, what this opinion piece argues, I think, is a very good middle of the line solution, which is, come up with points of view and actually document those points of view on making sure that government spending is effectively accountable, that there's no more wasteful spending, and that there are certain programs that both parties can very quickly agree to as being, very wasteful. And if you start there, you maybe get enough across the line that both parties kind of say, this makes sense, let's do this. And then we can kind of increase the debt limit. Because in the absence of that, the US will have to default on debt. This is always the big threat. It's never happened. And if that happens, or there is the looming threat of that happening, combined with the banking crisis, combined with the liquidity crisis, combined with the real estate crisis that may be emerging here,
Let me ask you a question that's
you could have things really melt down. So I think this is the biggest black swan. It's not a black swan, but this is the biggest kind of elephant in the room right now. I think if people in DC could get together today, and if you could, instead of doing the typical last minute 24-hour vote a day before the debt ceiling needs to be increased,
be thoughtful and do it now.
If this could be addressed today, it could start to put in some of the layers of backstop and coverage and protection and safety that the markets, I think, really need to manage some of the trepidation in the weeks and months ahead.
I want to jump to the crypto crackdown and get your opinion on that, Sacks, first, but I want to do a clarifying point here with Friedberg. You have been in the Ray Dalio end of Empire's collapse, and that, hey, maybe the U.S. is winding down its supremacy, and Balaji was pretty much saying, yep, this is the moment. Is there any light between your position of hey, Dalio's correct, this is the end of the empire, and Balaji's like, it's the end of the empire right now? Where do you stand on that, Friedberg?
So, I've been concerned. I've told you guys this for 3 years, and I've obviously promoted this book for 2.5 years. And Dalio's points of view, with lots of kind of empirical wisdom behind it, I think indicate that the U.S. is on a path, and the way we spend and the way we behave and the way markets are reacting, I think indicates that a lot of what has happened historically is happening now in the U.S. Now, it doesn't, I don't know if it's going to happen overnight. That's where I would have light with Balaji.
Okay.
The notion of kind of hyperinflation, again, I think means that, so think about all the US dollar holders around the world. It would be a shock for the collective system. It would require the collective system to collectively agree to get off the dollar very quickly for that to really happen.
Yeah.
In the meantime, I do think there will be inflationary effects. I do think there will be massive kind of asset value shocks. But I'm not sure there's going to be this kind of Weimar Republic, Deutsche Mark, hyperinflation thing, because it is the reserve currency and it is so widely held by everyone. It would require collective giving up. It also seems like there may be, we talked a lot about the petro-yuan trade, which I think is critical to see that actually happen. I think that's going to be the linchpin.
Got it.
Maybe that catalyzes this. And that seems to be a little bit tightrope right now, too. It doesn't seem super definitive that Saudis are embracing China. There's obviously this behavior with Saudi Arabia and Iran.
But
it's not as definitive right now. I think that needs to happen to kind of really catalyze that.
Let's get our tinfoil hats on here for a second. In relation to the Balaji bet, there has been a lot of action against crypto. Obviously, authoritarian countries took control of crypto long ago. China banning it, etc. North Korea, other authoritarian places kind of tighten their grip on it. Now, here in the United States, Coinbase got a Wells notice. That is a warning, basically, and giving you a last chance to kind of respond to the SEC. And this was based on their loaning programs. And on top of that, a number of other crypto crackdowns have occurred. We saw celebrities getting smacked down and getting fines and doing settlements. This has led Sacks to a theory that the United States government wants to break the back of crypto. Crypto's done a great job of breaking their own back with plenty of crypto grifts, insider trading, and all kinds of shenanigans with FTX and front running and painting the tape. Any grift or criminal activity possible seems to have been exploited. Do you think that these two things are in some way coordinated, or there's a coordinated effort by the U.S. government to destroy and kill crypto as an off-ramp for the U.S. dollar while the U.S. dollar is dealing with these crises, Sacks?
Well, there's a really interesting article that was just published on Substack by Nick Carter, who I guess is a guest writer on Mike Solana's Substack called Pirate Wires. It's a follow-up piece to an article he wrote 6 weeks ago where he laid out an operation by the Biden administration called Operation Choke Point, which made the case that the Biden administration was quietly attempting to ban crypto. And now, a month later, there's all these things all these steps that the administration is taking to go after crypto. And he lays out a bunch in a bullet point list. So the SEC announced a lawsuit against crypto infrastructure company Paxos. Crypto exchange Kraken settled with the SEC. SEC Chair Gensler openly labeled every crypto asset other than Bitcoin a security. Senate Committee on Environment and Public Works held a hearing lambasting Bitcoin. Biden administration proposed a bill that singles out crypto miners for owners' tax treatment. New York Attorney General declared Ethereum, which is the second largest crypto asset, a security. That's a huge change, by the way.
Yep.
SEC continued its anti-consumer protection efforts by doubling down their attempt to block a spot Bitcoin ETF. OCC let crypto bank Protego's application for a national trust charter expire. And then the SEC just sent Coinbase a Wells notice. So I think it's hard to argue that there isn't a concerted effort now to crack down on crypto by a wide variety of government agencies and authorities, starting with Gensler at the SEC, who seems incredibly hostile to crypto. So now the only question is this correlated with the stress that the banking system is under, or is it just a coincidence? And that I don't know, but I think the argument Balaji would make is that at the same time, they're going to deflate the dollar. They're going to make it harder for you to find an off-ramp. And he actually brought up a historical example that I wasn't aware of. I think it's called Executive Order 6201, which is FDR, way back in the 1930s, actually had an executive order that confiscated all the private gold bullion in the country. And they seized the gold bullion, making the accusation that private citizens were hoarding too much gold. So in any event, this is the theory. I don't know whether it's true or not. It could be a coincidence.
Chamath, do you think that this is correlated in any way with the crisis, or is just the fact that FTX blew up and all these other things blew up and the public is really upset that they lost a lot of money on this and the SEC has got to cover and be a little bit more active instead of reactive when it comes to dealing with the crypto losses that consumers had?
Yeah, it's the latter. I mean, I think that there was a rumor going around, I don't know how true it is, that FTX was days away from getting a critical approval by the SEC to actually even further legitimize their U.S. exchange before they went out of business. So I think Gensler had to pivot very hard from, at a minimum, being very pro-FTX, and there's all kinds of stories about his interrelatedness with Sam and his family, to very anti-bit or anti-crypto in general. That's clearly happened. But look, I think that this is like a lot of tin hatting, which I don't think is very productive. If you look at the total number of non-zero Bitcoin wallet addresses in the world, and let's be extremely generous and say it's 100 million, there's still 7 billion people in the world. And so I just think everybody that tries to speak about the fragility of the US and worldwide banking system is right. And that part I think is quite lucid and unemotional. But every time they try to connect it to Bitcoin, they sound like a crazy person because they're just talking their book.
And that is exactly the case, by the way, with this kid, Nick Carter. Yeah.
And the best example to demonstrate this is in all of this chaos. If Bitcoin or crypto assets in general were truly a legitimate off-ramp and salvation from US dollar hegemony and all of this stuff, why isn't Bitcoin at least at 35,000 a coin right now? It's barely above 28,000. It really hasn't moved that much. And I think the real answer is that most people in Bitcoin are not trying to hedge their existing fiat currency exposure. They're just picking off people in retail. And they're just day trading this thing. How else do you explain an asset that is not absolutely ripped in the face of all of this terrible news about the financial system? And I think the answer is because it's still a cul-de-sac of users. It's not broadly available, not broadly adoptable, not broadly used. I still believe that it's valuable. I was the earliest proponent of Bitcoin, 2011.
Yeah.
2012. So I believe that there's a place for it in one's portfolio, but I just think connecting these dots misses the point. And I think the point is much, much bigger than a crypto off-ramp. The point is that we have a lot of systemic shocks that are building up in the system. We have broken a ton of the systems that cause the financial infrastructure and the world to work properly. And we are just starting to uncover how they're broken. So I think we need to focus our energy on that and dial down a little bit of the Bitcoin maxi stuff because it distracts from a really important set of topics that are more inclusive and actually touch 7 billion people.
We have to do the cleanup work. And just to be perfectly clear here, Nick Carter is a career crypto. He's on his third fund, his $250 million third fund, according to a quick Google search. He's a partner at Castle Island Ventures. And I believe Balaji believes what he's saying, and at the same time is massively in Bitcoin. And the $2 million he'll obviously lose in this bet, or the 99.9% chance, and he said that already. I think he believes he's doing a service, just like he did believe he was doing a service with COVID. So I do not doubt his intent, but I believe his book is based on this, and the $2 million will be easily paid off by his increase.
He's a very smart and good guy. My point is, put this in the who cares bucket and get back to the facts. Friedberg mentioned it. We have a debt ceiling problem that's in the offing. Sacks mentioned it. We have a commercial real estate crisis. We just talked about the fact that he didn't raise rates enough, nor did he cut enough. So we're in this weird middle path that Jay Powell we're talking about. So those are the facts on the ground that I think we should focus on, because those will have implications to how people can borrow, start businesses, capitalize risk assets. That's a big problem.